Welcome back, everyone, to another deep dive. Today, we're looking at your research on global asset allocation,
Mm-hmm.
which seems like a very timely topic.
Yes.
With everything that's going on in the world, we've got some really insightful articles and reports here, and I'm really curious to break down the complexities of global investing and understand the potential benefits and challenges,
Right.
and see what strategies might work best for
Or everybody.
for you, the listener out there.
Yes.
So,
Well, it's interesting because global asset allocation, it's like pushing the concept of diversification even further.
okay.
Because we always talk about spreading your investments across different types of assets like stocks, bonds, real estate, all that.
Yeah.
But this is also saying not only different asset classes, but also spreading it across different geographic regions
Okay.
with their own economic landscapes, their own cycles, their own.
So so we're talking about more than just like picking a few international stocks.
Right.
There's a real strategy involved
Absolutely.
in global asset allocation.
It's all about strategy.
Okay.
Imagine if all your investments were only in the U.S. stock market,
Uh-huh.
and then all of a sudden the U.S. economy takes a dip,
Right.
a downturn. That would be a very concentrated risk, a very big risk for you.
Right.
So global asset allocation is trying to mitigate that risk
Yeah.
by spreading it across different regions and therefore capitalizing on, let's say, growth opportunities in emerging markets like China or India, which may be booming while the U.S. might be going down.
Right. So that makes sense,
Yeah.
especially considering how interconnected all the global markets are these days.
Yes.
But investing in emerging markets,
Mm-hmm.
while it does potentially have a higher return,
Yeah.
also increase the risk.
It's a valid point.
Yeah.
Emerging markets often carry a higher risk profile, but usually with a higher risk comes the potential for higher returns.
Right.
Right. So it's really a trade-off that investors need to carefully consider,
Yeah.
based on their risk tolerance. You think of it like this.
Okay.
Imagine, investing in a promising startup that could either skyrocket in value
Right.
or completely fizzle out.
Right.
You just never know.
Okay.
It's the same kind of principle applies to emerging markets.
Okay. That's a great analogy.
Yeah.
So now you mentioned geographic diversification,
Mm-hmm.
but what about currency risk?
Uh-huh.
Doesn't investing in different countries
Yeah.
expose you to
To the fluctuation.
fluctuations in exchange rates?
Yeah, that's right. So currency exposure is definitely an important aspect to consider. So imagine you buy stocks in a European company
Okay.
and the euro strengthens against the US dollar. That appreciation in the euro is actually going to increase the value of your investment when it's converted back to dollars.
Right.
So you gain there.
You gain there.
But the opposite could also happen. If the euro weakens, well, then it could negatively impact your returns.
That's right.
Right.
So it's kind of a double-edged sword.
It is. It is. It can work both ways.
While diversification helps manage this risk, it's still a factor to be aware of.
Yes.
What other challenges do investors need to consider when they're kind of venturing into this global investment arena?
I mean, geopolitical risks are huge.
Okay.
Right. Political instability, wars, even trade tensions between countries can significantly impact investment performance.
Okay.
And then also just the additional complexities of managing a global portfolio.
Uh-huh.
Like you're navigating different markets, regulations, time zones. All of that adds another layer of complexity.
So it sounds like, venturing into global markets really does just add another layer of complexity to investing.
Mhm.
But before we get too overwhelmed, I think it would be good to break down some specific approaches to global asset allocation.
Okay.
And I'm assuming there's more to it than just randomly selecting a few international stocks.
Oh, yeah, absolutely. There are actually several well-established approaches, each with its own advantages and disadvantages.
Okay.
For example, a common one that is used a lot is market capitalization weighting,
Yeah.
where you allocate investments proportionally to the size of each country's stock market relative to the global market.
So if the U.S. stock market represents, a big portion
Right.
of the global market capitalization,
Exactly.
wouldn't this approach kind of lead to a disproportionate investment in U.S. stocks?
That's a very good point.
Yeah.
Yeah, and that's why while it is a common approach and it's often used in a passive way, it can actually lead to, an overexposure to specific markets.
Right.
So that's why it's important to consider, alternative weighting
Yeah.
methods
Hey.
that might provide more balance.
That makes sense.
Yeah.
So what other approaches are commonly used in global asset allocation?
So another approach is equal weighting,
Okay.
where you allocate an equal percentage to each region or country, regardless of its market size.
Okay.
So in a way, this strategy can give you more exposure to those smaller markets that might have some hidden gems with high growth potential.
So that sounds interesting, especially for investors who are, comfortable with a little bit higher risk.
Mm-hmm.
Are there any other approaches that focus specifically on, like, mitigating risk?
Well, yeah, you have something called risk parity allocation.
And
And what that tries to do is it tries to balance the risk contribution of each asset class
okay.
rather than simply allocating based on, market size or geography.
Right.
So this one really emphasizes diversification across those various asset classes,
Hmm.
aiming to smooth out returns over time.
So it's taking kind of a more nuanced approach,
Nuanced, exactly.
considering the risk profile of each asset class.
That's right.
Um, are there specific scenarios where one of these approaches might be more suitable than the others?
Yeah, absolutely. I mean, the choice of approach really depends on your own individual circumstances, your risk tolerance, and what your investment goals are.
So speaking of individual circumstances,
Mm.
wouldn't the time horizon for investments also play a crucial role in selecting the appropriate strategy?
Oh, of course. Yeah. I mean, the time horizon is a significant factor.
Right.
So, for instance, a younger investor with a longer time horizon
Mhm.
might be more comfortable with a more growth-oriented approach,
Okay.
potentially with a higher allocation to equities, including those emerging markets.
Okay.
However, somebody who is nearing retirement, well, they might prioritize stability and income generation,
Right.
leading to a more conservative approach, probably with a larger allocation to bonds.
Right. So it really does seem like aligning the
Yeah.
strategy with your own, personal circumstances and financial goals
Yes.
is these key.
Absolutely.
Are there also different philosophies when it comes to managing global asset allocation over time?
Yeah. There are two main approaches.
Okay.
You have strategic asset allocation,
Okay.
and then you have tactical.
Okay.
So strategic allocation, it really focuses on the long game,
Uh-huh.
like setting long-term targets for different asset classes and regions based on, again, your risk tolerance
Right.
and your investment goals. So it's about creating a roadmap and really sticking to it, only periodically rebalancing to maintain that desired allocation.
Okay, so it's like setting a course
Yeah.
and staying the course, making little adjustments along the way
Exactly.
to stay on track. What about tactical asset allocation? How does that differ?
Tactical asset allocation is a lot more dynamic.
Okay.
It involves adjusting your portfolio based on short to medium term market opportunities. So in a way, it requires a deeper understanding of those market cycles and economic trends,
Mm-hmm.
allowing you to kind of potentially capitalize on those shifts
Okay.
that happen in the market.
So while strategic allocation emphasizes, long-term consistency,
Right.
tactical allocation.
It's more about trying to play those
Yeah.
dynamics.
Okay. So they both seem to have, their own merits,
Yeah.
depending on the investor's, expertise
Yeah.
and their risk appetite.
Yeah. I mean, the key is really to choose an approach or even a combination of approaches
Right.
that works best for you and aligns with, again, your individual circumstances and
Mhm.
your own investment philosophy.
This has been incredibly insightful. We've covered a lot of ground.
Yeah.
From the core concepts of diversification and risk management
Right.
to different allocation strategies, philosophies,
Mm-hmm.
and now I'm eager to dive into some concrete examples
Mm-hmm.
and some practical tips for building a global asset allocation portfolio.
Okay, great.
So let's get into it. How do we actually build one of these things?
All right, let's do it.
All right, so let's get practical.
Okay.
We've discussed all these concepts, but
Mhm.
how do we actually build a global asset allocation portfolio? Where do we even begin?
Well, I think the most crucial first step is really understanding your investor profile.
Okay.
It's like, what is your risk tolerance? how much volatility can you handle without, losing sleep at night?
Hmm.
And equally important, what is your time horizon?
Okay.
Are you investing for retirement like decades away,
Right.
or do you have shorter term goals?
Okay. So
Okay, so
it seems like defining those parameters first
yes,
is key to then
right,
choosing, the right investment strategy.
exactly.
But once you have that figured out,
Mm-hmm.
what are the tools or vehicles that can help you achieve that global diversification?
Well, one of the most efficient and cost-effective ways to do that is through exchange-traded funds or ETFs,
Okay.
They offer exposure to a basket of assets,
Mm.
tracking specific indices and covering various regions and asset classes.
Okay, so ETFs are great
Hmm.
for broad market exposure.
Yes,
But with so many options out there,
right.
are there any specific ETFs that you would recommend for someone just kind of starting to explore global markets?
Well, for a broad market exposure, the Vanguard Total World Stark ETF, the
Okay.
ticker symbol VT,
Okay.
is a very solid option.
Okay.
It tracks over 9,000 stocks across developed and emerging markets,
Wow.
offering really substantial diversification.
Okay.
Now, keep in mind, such a broad index might not outperform more focused investments.
Okay, that's a good point. Yeah.
If you're more specific, you might get better returns.
What if someone wants to focus specifically on emerging markets?
Mm-hmm.
Are there ETFs that cater to that?
Yeah, definitely. The iShares MSCI Emerging Markets ETF,
Oh,
ticker symbol EEM,
Hmm.
tracks a broad range of companies in emerging economies.
Wow.
So it's a good way to tap into those high growth potential markets.
Mm-hmm.
But remember, again, emerging markets come with higher volatility.
Right. Higher growth often comes with higher risk.
Exactly.
Okay. Now, for someone who maybe prefers the stability of bonds,
Mm-hmm.
but still wants global exposure,
Yeah.
are there any ETFs that cater to that?
Definitely.
Okay.
So the SPDR Bloomberg Barclays International Treasury Bond ETF,
Okay.
ticker symbol BWX,
EWX.
focuses on international government bonds,
Okay.
providing a good balance of stability
Mm-hmm.
and global diversification.
And of course, investing in international bonds also has its own complexities,
Mm-hmm.
especially considering fluctuations in interest rates.
Yes, and currency exchange.
And currency exchange. Okay.
Right.
So we've got VT for broad global stocks,
Huh.
EM for emerging markets,
Mhm.
BWX for international bonds.
Mm-hmm.
Are those? I mean, those are great starting points.
Yes.
What's the next step in building this portfolio? Do we just set it and forget it?
Not quite.
Okay.
Because, long-term investing success really requires that you regularly rebalance your portfolio.
Okay.
Because what happens is, over time, some investments will outperform others.
Right.
And that will cause your portfolio to drift from its original target allocation.
Mm-hmm.
So rebalancing involves selling some of your winners and buying more of your laggards
Okay.
to maintain that desired allocation.
So rebalancing makes sense, to
Mhm.
ensure that your portfolio stays aligned with your risk tolerance and goals.
Yes.
But wouldn't frequent rebalancing also lead to higher transaction costs? How do you strike that balance?
That's a great point.
Yeah.
The frequency really depends on a few factors,
Okay.
including those transaction costs, your risk tolerance, and the overall volatility of your portfolio. So some investors rebalance annually, while others do it less frequently,
Mm-hmm.
especially if they're, in it for the long term and using those low-cost index funds or ETFs.
Right. So it's a balancing act between maintaining your target allocation
Mm-hmm.
and minimizing costs.
Exactly.
Okay, now let's move on to some specific global asset allocation strategies.
Okay.
Could you walk us through a couple examples
Yeah.
that might be helpful for our listeners?
Yeah, let's start with kind of a classic approach, but with a global twist,
Okay.
the 60-40 portfolio.
Okay.
Okay, so this strategy involves allocating 60% to stocks and 40% to bonds,
Mm-hmm.
spread across different regions.
Okay.
For instance, 30% could be allocated to U.S. stocks, 15% to international developed markets, and 10% to those emerging markets.
Okay.
On the bond side, you could have 30% in U.S. bonds and 10% in international bonds.
So that's a pretty well-balanced approach
Mm-hmm.
for someone seeking,
Diversification.
diversification and moderate risk.
Exactly.
But what about investors with a higher risk tolerance
Mm-hmm.
who are looking to really maximize growth potential.
Yeah.
What
Well,
would, what were,
for them, a global all-equity portfolio
okay.
might be more suitable.
Okay.
So this approach focuses entirely on equities.
Mhm.
For example, 40% to U.S. equities, 20% to European equities,
Okay.
20% to emerging markets,
Mm-hmm.
and then 20% to, let's say, Asia-Pacific or other promising regions.
Okay.
However, keep in mind that a portfolio solely focused on equities can be more volatile
Right.
and might not be suitable for all investors.
Right. That's important to highlight.
Uh-huh.
Now, on the other end of the spectrum,
Mm-hmm.
what about someone seeking, stable income?
Yeah.
Perhaps like a retiree looking for, consistent cash flow.
Right.
What kind of global asset allocation strategy would be appropriate for them?
Well, in that case, an income-focused global allocation strategy would be a better fit.
Okay.
This portfolio might be split between global dividend-paying stocks, international bonds,
Mm-hmm.
and other income-generating assets like real estate investment trusts, REITs.
Okay.
Of course, even with an income focus, global diversification is still essential.
Right. So even within an income-focused approach,
Mm-hmm.
global diversification remains crucial.
It does.
That's a consistent theme that we've seen across all these strategies.
It is, because diversification is a fundamental principle of sound investing,
Right.
regardless of your goals or your risk tolerance.
This has been incredibly informative. We've explored various global asset allocation strategies,
Yeah.
from the balanced 60/40 portfolio
Mm-hmm.
to the growth-oriented all-equity approach,
Right.
and then the income-focused strategy.
Mm-hmm.
Is there, before we move on, is there anything else
Yeah.
our listeners should keep in mind as they consider building their own global portfolios?
I think it's crucial to remember that these examples, they're really just starting points. You know, the most effective global asset allocation strategy is the one that truly aligns with your individual circumstances,
Right.
financial goals, and comfort level with risk.
Okay.
There is no one-size-fits-all solution.
Right. Personalization is key.
Absolutely.
We've really explored a lot, the intricacies of global asset allocation,
Mm-hmm.
discussed strategies,
Mm-hmm.
looked at specific ETFs.
Mm-hmm.
Now let's shift our focus to you.
To you, the listener.
Yeah, the listener.
Yes.
As you're thinking back on our discussion,
Mm-hmm.
what aspects of global asset allocation
Yeah.
really stand out to you? What resonates
Yeah, what resonates?
with your own financial goals?
Yeah.
Are there any aha moments or new perspectives that you've gained?
Mm-hmm.
Maybe you're thinking about adding some international exposure to your portfolio,
Mm-hmm.
or perhaps you're reevaluating your risk tolerance.
Right.
It's those reflections and questions that can be, incredibly valuable
Yeah.
as you start to either craft or refine your own global investment strategy.
Absolutely.
And it's important to remember that this is a journey, not a destination.
It is a journey.
Your investment strategy should evolve
Mm-hmm.
as your knowledge and circumstances change.
Yeah. The beauty of global asset allocation is its adaptability.
Okay.
It really is a framework that can grow with you, accommodating your changing needs and the ever-evolving global landscape.
Now, if you're feeling inspired and you want to take action,
Mm-hmm.
starting small is always, a great first step.
Yeah.
Maybe dip your toes into the global markets with, a small allocation to a broad-based ETF
Mm-hmm.
like VT.
Like VT. Exactly.
Or you could explore, specific regions or countries
Mm-hmm.
that align with your interests and your investment philosophy.
Right.
Researching their economic outlook. Yeah.
Identifying potential opportunities.
Yeah, it can be a rewarding process.
Yeah, it can be. Taking that first step is often the most important part.
It is. It's about
Sure.
building that global perspective and expanding your investment horizons.
And remember, seeking guidance from, financial professionals can be invaluable.
Yes, absolutely.
They can provide personalized advice
Mm-hmm.
and help you navigate the complexities of global investing.
For sure.
Building a team of trusted advisors can make a significant difference.
Especially as you delve deeper into these global markets.
So as we wrap up our deep dive into global asset allocation,
Mm-hmm.
remember,
The world
the world is your oyster.
is your oyster, exactly.
I love that analogy. Global asset allocation is your is your Pearl Diving Kit,
Yes.
equipping you to explore the vast ocean of investment opportunities.
That's a great way to put it.
So go forth
Go forth.
and explore.
Explore.
Embrace the global landscape.
Continue learning.
Keep learning.
And watch your financial future flourish.
Absolutely. And until next time,
Yes.
keep diving deep.
Keep diving deep.
And keep growing that financial wisdom.
That's a wrap for today's deep dive into global asset allocation.
Mm-hmm.
Thanks for joining us.